So everything is all stay set up for a major run up in silver. And I would not be surprised that we on record that we see a peak in silver in March. And
March of this year?
this year, for 2 weeks, we could be looking at over 30 and just a continued run up.
Hmm.
Because something keep in mind, Andy, industrial users, silver is a critical metal.
John Lee, Silver Elephant, how you doing?
Fine. Good morning, Andy.
Good morning to you. You're in Vancouver. Is that
Yes, I
correct?
am.
Yeah, I'm in Atlanta, Georgia here. Let's talk some silver. We're getting a lot of movement here in the gold market. We really broke out, and I'm expecting silver to follow here. So tell me your 30,000 foot view on the macro of silver. What do you see coming?
Silver and gold has always been money. And through the 20 years I've been in the silver and gold industry, first 10 years as a retail investor, and then the second 14 years as a CEO of a mining company. I've been following silver since early 2000. And just through the studies and talking and researching with the likes of Ted Butler and David Morgan and these gold bugs. And I was also quite involved in GATA with Bill Murphy and Chris Powell, that the market is very heavily managed. And the reason for that, Andy, is in order for the agenda to continue, in order for the printing machine to continue, I mean, gosh, you're looking at a NVIDIA $2 trillion. I remember not only 5 years ago, it was some sort of a watershed event for Apple to take out $1 trillion. So for that agenda to continue, and for the big government to continue their welfare program, and just keeping on the status quo, the real money has to be managed. Otherwise, I mean, that is the key driver that makes sort of the world where we are today. Therefore, the question I've got asked a lot is, well, what's the point getting into the precious metals market if it doesn't respond to inflation, it doesn't respond to wars in Ukraine, etc. Then then this is where the technical indicators really come in handy. Not only, I'm not talking on a day-to-day basis, but on a month-to-month and on a year-to-year basis. I am firm believer that it's inevitable and it's imminent that silver is going to break out $30 because gold has done that already, breaching out the $2,000 level. And just to share with you a bit of the significance of that $2,000 breakout by gold, that cup, there's a two cup and handle formation. One is a longer one, starting from 2010 to 2020. At the bottom is the financial crisis at about 1200. And then the second cup and handle was the 2001 financial pandemic, where gold breached around 1600. So if you look at the neck level, which is a $2,000 line, on the optimistic scenario, then gold is going to go the other side of the height, which is 2,000 minus 1,200. That will be 2,800. And on the conservative scenario, then you're looking at these. You can look at that the bottom of 2021 at 1,600. So you add 400 to 2,000 will be 2,400. Silver is it's a very complex market. We can talk half an hour, 20 minutes about it. But given that silver is money and it will follow gold, the important technical levels for silver is $28 to $30 level. I don't place a lot of emphasis on $50 level. So once silver goes out of past 30, it's really anybody's guess. The only one metric I would say maybe is the gold to silver ratio at 70 to 1, which is the historical average. At a $24 gold, you're looking at over $35 silver. But typically, silver will blow off towards the end of a run, which we are embarking on right now. We're still sort of the middle early phase. At around 50 to say 35, which is an extreme low ratio of gold to silver, then you're looking at potentially $80 to $100 silver, Andy.
Yeah. So you just name dropped a lot of people I've spoken to and I've had on. And I want to work all of that out. So we're in a good company here. I just had Francis Hunt on, and he's a trader. And he said, you talked about the gold silver ratio, that relationship. He says we are going to get to, obviously we don't know when, but it will be a single digit. That's what he's saying. So just start doing the math. And he said gold's already run, and he expects gold to go higher too. Don't get me wrong. But his whole thing was that silver will be catching up, and that ratio has a chance to go to the single digits. So just do the math. So I thought that was interesting.
Well, Andy, let's talk silver. Uh, Silver has been a laggard to gold. I mean, the
Mhm.
ratio topped over 90 only a couple of weeks ago. And the historical, it's only been a couple of times where the ratio exceeded 100. It's been very persistently high at over 80, which is not quite normal. And we're trading at 88.
Right.
And this is a particularly peculiar. This is peculiar because usually in times of buoyant equity market where there are not really sort of imminent threat in a pandemic or war or some sort of crisis. I mean, we're sort of, treading the waters alone and there's not really a major recession. Silver should have been outperforming gold already. Um, the problem that I see is in some estimation that I have read, there's only maybe 5 billion people left on Earth, not 8. And this thesis is supported by very broad underperforming base metal commodities and also underperforming of oil, even though United States is not fracking. So keep in mind that silver, 70% is industrial. So my belief is that silver is being held down from a combination of managerial control, which they do for gold as well, but also that industrial lackluster demand across the spectrums of base metals. So that is holding down silver. And then if you look at 70% of the silver is industrial. So that is putting a cap on the silver or silver, on the down days where Asia open, right? You got silver get whacked because China export a lot of the silver. So it's actually a physical seller that's pressing the market. And gold is being steady because gold is wealthy's gold money. And a lot of wealthier people now than there was before, and they're multiplying. Um, and so on that basis, you're going to see a lot of very volatile silver action. If you look at 300 million ounces of investment demand at, oh gosh, $25, right? You look at $7 billion. It's a drop of bucket, whereas gold annual production goes close to 100 million ounces. It's hundreds of billions of dollars of investment demand. So I wouldn't put all my baskets in silver because, you know, some nuances or you mistimed and you're going to be suffering a lot of pain. Yes, it's a market that's very whimsical and capricious, and I think putting any price tag on it would be somewhat of a futile exercise because everything's going to be in hindsight. You don't know who's going to show up, and
Right.
given there's thousands of billionaires there's out there, right? Any one of them could pull the trigger, but just keep in mind because of the industrial demand, there's always going to be constant supply of silver that's chewing away from the market. So that's something to keep in mind, Andy. So I don't really have a big forecast on silver. It really is. It's a very complex market. And that's why silver sometimes reacts so violently because you got the industrial coming in. That's you know that's on the low side, and then it coupled with the managerial pressing of the silver, and then lackluster investment demand. So you see this very wide yo-yo action.
Right. So, comment about you talked about being managed. One of the things that I found interesting, and I talked to Andy Scheckman about this probably 4 weeks ago, is that China has an exchange now for silver's contracts, and it's trading higher than here in the U.S. And so it seems like that would be a great arbitrage opportunity if somebody's not already doing it, buying over here and selling over there, which would lead to another catalyst to rocket silver higher. What do you know about that, or what do you think about that?
I don't pay a lot of I don't pay a lot of I used to, but I don't pay a lot of attention on the COMEX inventory, the price differential amongst different exchanges around the world. We're in the mining industry, and we do have a sister company that mine vanadium, and we have tried to exploit that arbitrage. There's a various of different taxes and customs. You got to keep that in mind.
Sure.
And there is a uniform 25% tariff of any Chinese import into the United States. I'm not sure silver is one of them. And I think going through all of that exercise just to get that 10%, there's probably
Yeah.
a better way there's probably a better way to
Make some money.
utilize your capital.
Yeah. Yeah. Got it. Well, let's talk about you and the company then, as we have this great story history. I mean, everything's being set up for silver to rocket higher. How are you and how are you taking the company to take it into? How are you positioning yourself to take advantage of that?
Well, first of all, gold is different from silver. I think there are a number of very attractive gold mining companies, and I've invested in well over 100 junior companies and traveled over 40 countries and toured a lot of mining projects all around the world, from South America to Asia to Russia and so on. There are not many silver companies that I believe are fairly valued, and there's even fewer companies that are actually that are malicious, that are worth of investment. And this is probably echoed by the likes of even First Majestic and Coeur d'Alene and Silver Standard, because they started it with silver and then they eventually, or Fortuna Silver, and they're like, well, I cannot find something that is more prospective than what I already have in the silver space. That just show you that, and there are very few primary silver projects. So I would, if I'm an investor in silver, I will actually buy silver first, and which I own quite a lot. It's interesting. That's so I will place more emphasis on bullions and in particular numismatics. I think the margin is going to continue to go up. So that's a different realm. On the mining companies, given a lot of the quality companies, First Majestic, for example, all the mining companies trading at two decade low because because the prices hasn't caught up to inflation, and that was by design by the managers. That I would focus especially on this still early stage, somewhat on producers, and I would even focus on producers in a jurisdiction where you feel comfortable and have done your research. So, for example, you know, I mean, these are major companies like Hecla, for example, of which I own. They focus all of their resources in North America, and they're very active in involving in companies in the junior stage with potential resources available. So I like the company a lot. And then I would a little bit be concerned about Mexico, given sort of a lot of the um, local indigenous sort of movement and activities there. And again, but then you got to be every project has its own neighbor. Like if you look at Vancouver, right, some neighborhood are beautiful, and then you cross a street down the road, it's complete opposite. So can't really generalize country per se, but I would just say go back again, focus on first of all producers with a good balance sheet. I think there's a lot of companies in the last 5 years have been really reeling on their cash position. So I would be very, very concerned about, a handful of companies that are a modest producer, and then you have these ETF that's chasing these producers, marginal producers, because they're producing the ETFs. And these
Right.
vector funds, they have no choice but to participate. But they could go belly up like in a quarter because they're what I call upside down, where their liabilities exceeded their assets by two or three, even four or fivefold. Andy, the
Yep.
last part I will focus on is juniors have not too much liquidity and particularly have no resources in the ground. I mean, there are quality juniors, even like our company, that have invested together with previous operators 40, 50, $60 million, right? They have tens of even 100 million ounces of silver in the ground. You don't need to take that exploration risk. So you want to really invest in late stage projects and producers at this point in time. But not to mention, you can always dangle, right? To sort of fulfill your risk appetite. Just like you go in the casino and betting roulette, even though you know the odds of two zeros, you're underdog. But
Right.
sometimes you're in the mood, and so be it. But just making sure that you have the proper risk tolerance and time horizon for such investments.
Got it. Is there a jurisdiction that you would stay away from, if you would? I had Rick Rule on a few months ago, and he said he would stay away from California. I thought that was pretty funny. But yeah, is there any place that would concern you as of right now?
Well, you looked at California, and the problem with California, again, I think it's not so much country dependent, it's almost down to the county. So another
Okay.
example I'll share with you, if you made a discovery of a project right in the middle of an agriculture uh,
Yeah.
commodity town, right? Or cattle's industry, or sanctuaries of religions and architectural histories, you're gonna have a problem. It doesn't matter what the stance of the government, that the locals have to be on board. And if the locals are not on board, and especially if they then somewhat partnered with the NGOs, then you're really in a extremely difficult position. The country has got to be safe. I mean,
Right.
there's a lot of Mexico areas where they're better armed than the government. So California is a case where the reclamation was very stringent. You have to put it back to the state of which you created it before you look a shovel in the ground. That is really the main reason. Uh, it's cost driven, and also um, the people that permit mines in California are the ones that are a dual mandate protecting the environment, kind of like the INS before. They are they're admitting immigrants at the same time protecting the borders. It's just a bit of dichotomy, right? So that's why it's
Sure.
difficult. I would be concerned about Mexico because of some of the drug cartel activities and problems there, and also some of the indigenous group. One thing, Andy, is the pendulum was swing also. Like in the case of Bolivia, they used to be anti-investment, but now they are opening door, looking at issuing $1 billion bond to start their lithium project. So I think a lot of it's all about timing. The
Right.
government stance, the public stance, the regulations, and all of that play a very important part. And also, you got to look at the economics as well. Like a case, say Argentina, which had a history of price control, meaning you have to sell your gold at a fixed price, $300, and natural gas at a fixed price to the state.
Yeah.
And then that currency gets recycled every
Right.
5 years. So I think there's a lot of questions, and what I tell you today might not be true 3 years from now.
Right.
And I would just encourage you to talk to the CEOs. I'm not so much active investor nowadays, but I think big one in Mexico, you got to really do a bit of homework on where the project's situated and that current circumstances there. In the middle of America, Guatemala, and Honduras, and these areas, you got a lot of geopolitical issues there as well. I will also shy away maybe from producers from China because of the war, and I think that's worsening. That's not improving, and that's kind
Right.
of a problem because there's companies that are the government is United States talking about delisting or having second thought about or putting stringent compliance and declarations of Chinese company listed on the American Stock Exchange. So something you got to also keep that in mind. And so it's a very difficult position to answer. I don't want to tell your country of which thing come back. You said, well, I listened to this guy, and then all of a sudden, my
Right.
dear position I sold is fivefold, right? So
Yeah, it can change really
it's
quick
explore.
too. Yeah, to talk to me about silver elephant. Talk to me about that. Tell me about the project.
The company I've been in the company since its founding in 2009, and that was just after the financial crisis, and I lost my shirt. I lost well over $10 million, and I made it back somewhat. And I thought it would be interesting to. I had a basket of companies that are sitting in my portfolio. I was like, they're trading at pennies, and I was like, well, why don't I take a stab at it? So I took over a shell of which I was an investor, and I put a few hundred grand and got started. And 14 years later, I've raised over $150 million through the Toronto Stock Exchange. We've acquired well over a dozen projects in in 3 different continents. And but um, it wasn't until 2015 when I got my hands on this particular silver project, of which we bought at the bottom the silver in 2015 when silver was just under $15. And that's a project that was in Bolivia, and it's a project which I invested in even before Evo Morales came in 2005, and I visited Bolivia in 2005. So that's a project I was very intimately familiar, and I was very happy to got it. And the name is Pulacayo. And collectively, Pulacayo is the second largest silver producer based on historical production. It was the silver from Pulacayo that helped Spaniard conquer the civilization back in the 1800s. And it was the silver from Pulacayo that built the railway from Bolivia to Antofagasta in Chile. So I like these brownfield exploration projects because where there's smoke, there's fire, and typically, and so through modern exploration, from its previous operators from 2000 to where we took over and spent another close to $10 million at the project in the last almost decade already. There's collectively over 100 million ounces of silver in the measured and indicated category, supported by well over 100,000 meters of drilling. So anywhere very, I know what we have in the ground is over 100 million ounces of silver and could be more. And another news is, Andy, we try to minimize dilution. We understand sort of the
I was going to
detriment
ask you about that. How do
of
you protect
dilution
me as
because
a shareholder?
I started Elephant with 40%, and now I'm down to 3%, and that's after put another $5 million into the company. So I lost 80% of my own money, and so we haven't raised a lot of money, and we partner with a company called India Mining, it's a world class management company with fabulous processing facility. So we're toll milling right now. We're just excavating some of the high grade silver oxides on surface. They're 200 to 400 grams per ton, and then truck it to their facility about 150 kilometers by paved highway. And they're paying us $5 million over 2.5 years, of which they already paid well over $2 million. And they are also reimbursing for all of our permitting, community relationship support, and operational expenses and infrastructure improvements. So I think it worked out really, really well so far. And so we're trucking right now on a day-to-day basis, and we're generating cash flow. So we didn't have the need to tap into the market, and we haven't raised any money probably since August of maybe even earlier last year. And it was
That is great.
Yep.
So you're
Yes.
producing right now.
We are produced, so we're generating cash flow, and we're one of the few companies actually generating real cash flow.
Yeah.
And as I said, there is oxide layer that's about 20, 30 meter from surface. And so Indian is doing almost somewhat as a favor by taking the cap of the oxide material. So this is very high grade. But there are very few facilities that process oxide nowadays because majority of the oxides around the world is already being depleted. What is the prized possession of Pulacayo is actually the silver. It's a sulfide uh, ore body, not ore because we're not reserves. So I want to be really careful. It's a sulfide resource, of which it constitutes over 95% of our resource. So then you got somebody going to pay us $5 million and help us take that
Just take it off.
overburden and then exposing that sulfide. And right now, Andy, the company is doing is permitting the sulfide plant. We anticipate the plant will be permitted by the end of the year, and also starting some of the engineering study to mine and to process this the sulfide portion of the Pulacayo project, and that I would say right now the timeline is looking at maybe 2015 we may be starting the sulfide operation, starting maybe again, right? Similar, taking some of the high grade sulfide and then trucking it to some of the nearby facilities that process sulfide materials. And then if the market is conducive for an equity raise of $10 to $15 million or some sort of joint venture partner can come in, then we will start construction of the sulfide plant in 2015. Then we will be processing in-house of our materials by 2016.
Excellent. Where are you or what's your ETA when you're going to be commercially producing silver, if you would?
Well, the word commercial is
Kind of slippery. Sure.
It's quite slippery depending on your nameplate production. Well, commercial production by definition is 80% of the nameplate production based on the feasibility technical studies.
Okay.
So our technical studies are out. We don't have current technical studies of the project. The reason is we have a lot of historical studies because I don't want to be doing technical studies on the $18, $22 silver because that will tell you a negative IRR and NPV, right? I want to
Right.
just silver is at a price where I felt the project is sustainable long term and can generate returns at around $30 silver. Then at that time I would update my studies. So currently we're trucking the project. Indian is helping us trucking about 50 to 100 tons per day of
Okay.
materials. So if we were to say just say on the 70, just take a round number, 75 tons per day at 300 days. So that's about 300,000 tons of materials at about, say, 7 ounces a ton. You're looking at over 2 million ounces of gross of silver that's being dug out of the ground to the market. So, I mean, that will put us probably top 20 silver producers that's listed on the Toronto Ventures Exchange. The
Yeah.
caveat, though, Andy, is we're not exposed to the silver price per se because we got a fixed a profit cash flow of $5 million that will be written to us. And then there's a kicker of another million at $28 silver and another million at $30 silver. So, I mean, there is some upside. But this operation, I just see as a set cap removal exercise free of charge. And the secondly is we'll continue to operate, advance the project, and operating the company without having to tap into the capital market.
Okay. Got it. If you could give us your final thoughts, if you would, on the silver market, where we're headed and or what you see going into the end of the year. And then, if you could give us your contact info, your Twitter, and how people can reach out to you and, and your tickers.
I'm an ardent believer of silver, and I am a student of history of silver, and I am very prolific chart artist. I'm a chartered financial analyst. Silver, when they go up, from the 80% of the gain on every silver run up in the last decade is achieved in less than 2 months, maybe even less. If you look at the 2021 run up, if you look at the 2020 run up, and I think it was 2020 from July to July 5th, July 1st. I remember that's when it started in Canada Day to from $18 to 30. It was 2.5 weeks.
Yeah.
And the Hunt brother run up in 1980. It was $15 to 50. In the 2011 run up, it was from $15 to 50 in less than 6 weeks. We can go into a lot and on what the reasoning is. I'm not sure I have time for this, but I would just say that we are looking at this major run up, and that is in progress, and we are still in early infancy because some of the things are holding down silver because the industrial demand lackluster of such, and that the cartels or the managers haven't really thrown the towel yet, even though they really try hard to get the gold price back to $2,000, and they weren't able to do that, and they're going overtime at it. And it just seems like every time they try to do that, it's less and less conviction because they see the wall. Writing on the wall is a brick wall of which they are shooting their darts and their archery on the brick wall, and it's not working, Andy.
Yeah.
I mean, the cartel threw us under the highest volume yesterday on the COMEX gold, and gold barely budged, and now it's barely budged 1%. And they're calculating that, well, it's costing them about $150 billion in a day just to do that. And they don't see the light at the end of the tunnel. That's a problem. And so the takeaway, and the question is, the insight I will share is you don't want to get cute and try to trade the market. Just like reminiscent stock operator, many people caught the bottom, and that's actually a curse and blessing because you think that you can catch and do it again and again. You got to just close the book right now and sit for a couple of weeks, and then there are some indicators on. And then the question then is, how do you catch the top, right? How do you call the top? Well, again, I think you should be glad that you are. Just tell yourself, if you buy from 20% of the bottom and you exit 20% of the top, and you've done better than 95% of the investment.
You're good. Yeah.
So you cannot be like, okay, well, silver went to 50, I sold, and then silver went to 30, 46. You're like, oh, that's average in, right? And then you do all the way back to where you started. So you just, again, where you felt that it's being a good run, and then let's look at something else. And there's always opportunity elsewhere. And then you got to close the book and move on. You got to be at peace with yourself. And the way to look at the top for silver, you can look at the gold to silver ratio at 30, for example. You can look at the equity market, if the equity tilting downwards. And because, again, silver is related to the economy, right? It's industrial.
Right.
So, and then if the Fed continue embarking on a interest rate rally campaigns again, then you got to be careful. But if silver is raging and at the bottom of interest rate cycle, where the market's at the top, where the ratio is 30, then this is a little bit long in the tooth. So
Right.
we're not quite there yet. And I also think that there is going to be at least one interest rate cut. I think maybe only one, given the election year this year in November. I don't think there's going to be any imminent collapse of the equity market either, given, as I mentioned to you about the election cycle. So everything is all stay set up for a major run up in silver. And I would not be surprised that we on record that we see a peak in silver in March. And
March of this year.
this year, for 2 weeks, we could be looking at over 30 and just the continue run up.
Hmm.
Because something keep in mind, Andy, industrial users, silver is a critical metal. It cannot be replaced by the solars, by the electronics. So they're gonna, instead of hampering the market, they're gonna start fueling the buyer because they're gonna have to they're gonna have to plan, right? They're gonna buy into the futures for their allocation for their production 6 months down the road.
Right.
And then mining companies in general, they're a bit of a lagger because they're similar, but their timings is different because the share, the volume and the shareholding structures and the timing and the psychology is different. So usually mining companies will have another even 3 to 6 months of a nice run after silver has peaked.
Right.
And but what you'll notice is the producer will be starting to sort of establishing a lower highs. And while you have these juniors and the speculative issuers that are sort of heading to the moon, if you see that pattern happening again, right? And silver is having the lower highs, and then followed by the major producers of lower highs, and then if you look at that food chain going down the road, then you kind of know that the match is burning, right? So you just want to scale down a bit and sort of take some money off the table and then go from there. I think that is one major thing. You don't want to miss the boat. If you miss the boat by 2 weeks or 2 months, you just miss the whole thing. And sometimes you just got to wake yourself up and also have a strong conviction of what you believe and not to sort of follow too much about Twitters and even what I say, because you could be like set, right? Set on your plan, and all of a sudden you hear Andy Millet say something, and then you just like change it. Like,
Right.
you know what? Like, I'll just say, for example, yesterday I was dead set in getting a pizza, and then all of a sudden, I saw like a sign of noodles, right? And I went for the noodle. I regretted it. And now I'm full. I cannot get my pizza, right? So have a well thought out plan and execute it. And so
Yeah.
what's right now is just get your position and sit tight for 2 weeks and then ready to reap the rewards, Andy.
Excellent. All right, John Lee, thank you so much. I really appreciate your time. Put your Twitter handle and your link to your company in the show notes.
Hey, absolute pleasure, Andy. Let's do this again sometime in the
I
future.
would love to. Thank you. Bye bye.